Hello, let me adjust this a little bit. Welcome to our channel. We have talked about how to create net worth. We have talked about tracking your income and see how much money you have earned throughout your working life. Our goal on our channel is to stop living from paycheck to paycheck, pay off our debt, and start building wealth. We want to cut down on our expenses as much as possible so that we can put our money to work. And even when we are sleeping, our money will be working for us. So let's get started. If you have not checked how to create your net worth or how to calculate your net worth, I'll link that below as well. And about how to track your annual income and see how much you have earned throughout your working life, I'll put that link below as well. Today we are going to analyze our net worth that we have calculated and see where we are compared to how much money we have earned throughout our working life. I have my spreadsheet here, and I'll put the link below in the description so that you can visit my website and download it. We calculate our net worth, which is the difference between our assets, and our assets include our fixed assets of $162,000. In fact, let's put it this way. Our assets include our personal assets, which total to $297,000, but you can see we track it for the year, and that includes fixed assets, house and one car, $162,000, liquid assets, our money in our bank account, our retirement account, investment account, all total to $134,000. And keep in mind that we are tracking it for my husband and myself, so you have to do the same thing. And I want to go check that video to see how we did it or how I explain it. And then our personal properties, which I didn't put anything because I don't really want to track assets that lose value. And we have, so our assets include personal asset and business asset. And you can see here there is a real estate property here of $31,000 included in the business asset of $54,000. We have business fixed assets, which will be furniture you have in your business. And I didn't list anything here because those furnitures depreciate in value, and I don't want to track losers in my portfolio any longer. But if you have valuable things that you'll be able to sell, well, you can track them as well. You are supposed to track them, but I'm just looking at what is really creating value in my portfolio. Then we have business liquid assets, which will be money or what you can turn into cash very quickly. We total to $23,000, and that's the business liquid asset, followed by the business inventory. And I didn't list anything for the last time we did it because, once again, those inventory are not what I'm after. So those are the total assets, and that total to $351,000. I don't think is up to date. Yeah. So that's that. The total asset, it will be the total of the personal assets and the business assets. And that total to, that's the next block coming, $351,000. But is $351,000 worth of asset does not mean that we are wealthy. We are calculating our net worth. Is the net worth. It's not how much assets you have. If you have a lot of debt, well, your net worth might be zero. So we need to stop thinking about how much we are making. How much we are making or how much we make does not make us wealthy. It just increases our working power, our spending power, but can still increase the way we can put the amount of money we can put to work if we are really working hard toward that goal. But in reality, it does not mean much when you are trying to build wealth. Your goal will be to track your net worth. So let's look at our liabilities here. Our total liabilities is $70,000 when it comes to personal liabilities. So the liabilities will be personal liabilities and business liabilities. And in our personal liabilities, we have mortgage and we have credit card debts. And as you can see, we pay off those debts before and it's decreasing over time. So the business liabilities, we don't have anything there because we don't owe anything in that category. Our total liabilities is $70,028. Our net worth will be the difference between our total assets, $351,000, and our total liability is $70,000, and that gives us $281,000 as net worth for both of us. You need, once you calculated your net worth, you need to ask yourself, how, on your goal toward building wealth, how are you doing, and what is really having an impact, a positive impact on your net worth. And as you can see, and that's how you are going to analyze the data, your result. We have fixed assets, and our fixed assets include our house and one car. And you can see that the value of the house is well above the car. But that's our main residence. We are living in it, and it's not really generating any cash flow. But that total to $162,000. That's quite a lot. And then you will see that we have cash, liquid assets, investment, retirement accounts, cash at the bank. That total to $134,000. So we have $162,000 in fixed assets, $134,000 in liquid assets. So those are the big components of our net worth or in our assets. And for the business, we have a property that is worth for $31,000, and then we have liquid assets of $23,000. So that total to $51,000 as to $54,000. And as we ask ourselves, what can we do to improve, to increase our net worth? We are already doing something by keeping our liabilities low. Against $162,000, the value of the house and the car, we have $70,000 against it, $54,000 left on the mortgage because we are trying to pay it off, which is increasing our equity in the house. But once again, equity in the house is not really generating any revenue for us. So our next goal, in order to improve our net worth, our next goal will be to increase in real estate so that our business assets can go up as well, because that's what will generating revenue for us. That's how you analyze your net worth, to see what power can you influence to have a positive result on your net worth. So if we invest in a real estate, then we'll have equity there, and then that will be generating rent every month as well. Even though that will increase our liability because you'll be using leverage, that will be a good debt. Don't borrow money to spend. Borrow money to create money. That it will increase your net worth. So as you can see, we keep our liabilities low. $351,000 of assets $70,000 in liabilities. We kept our liabilities low, which has a good impact on our net worth. But by going through our net worth, we notice that if we invest more in real estate, we will increase our net worth quite a bit. Your next step will be to go track your annual income, and I'll talk about it in another video. So you need to know your wealth, if you are accumulating wealth or not. And the way you calculate it based on the Millionaire Next Door written by Dr. Stanley, which I'll link in the description as well. You're accumulating wealth if you're at any year that you choose, your annual income, let's say your current annual income times your age, your current age divided by 10, whatever you come up with. In my case is 203,000, but I need to update it because let's just put that in 2029 my income is 55,000, 57,000. So if my income is 57,000 and my age is 41, then if I'm accumulating wealth, if this income times my age divided by 10 is 233,700. And I need to do the same for my husband as well, since we are tracking our net worth together. So if I assume that his income is, let's just use 39,000, and he's 41 as well. So he's creating wealth if his net worth is more than his income times his age divided by 10. Because our net worth is the sum of both, the sum of everything we own together. So if our net worth is equal or more than 393,600, we are accumulating wealth based on the Millionaire Next Door. But we just came from our net worth calculation sheet, and our net worth is 281,000. So if we go back to how we are accumulating wealth, we will see that 281,000, if you compare it to just my wealth accumulation benchmark, it is above that. If you compare it to my husband benchmark, our net worth is about that. But if you compare it to both, the total benchmark, we are below it. So how can we increase our net worth so that it is higher than 393,000? We are already decreasing our liabilities, but we want to create assets in the business area so that it can generate cash flow, instead of just creating assets in the personal area, assets that don't generate income because we are the one using them. If you have a house, you have car, you have boat, you are using them, you are not renting them out, you are not generating revenue, you are pretty much they are costing you money to maintain. It's not where you want to build your asset. You want to build it in the category where they can bring you income even when you are sleeping. So start working on your net worth and tracking how much you are making so that you can improve your finances and start building wealth. Thank you for watching. I'm Nina from Nina's Soap.